It is FOMC day, and the rates are remaining the same. We're going to be discussing the latest from Powell's presser, upcoming earnings, and much more on today's episode of Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, the Fed once again is keeping rates the same. We have the markets not responding favorably to what Jerome Powell said in his press conference, which just wrapped up a few minutes ago. How are you doing on this wonderful Wednesday?
I'm doing great. What's really funny? This weekend is the 1 year anniversary of that flash crash we got in Asia. There's a reason why I'm saying that. But the markets obviously have been kind of iffy all summer. It's been very low volume, stuff pushing up. Powell obviously saying nothing different than we've talked about in the past, but I feel like I'm in a good spot. I hope everyone who watches their show's in a good spot because I think it's about to get really fun very soon.
I'm in a frustrated spot. I've been a Jerome Powell apologist for what feels like years now. Like we've been
It has been.
watching, a lot of people just in the last few months have started watching these pressers because Trump started talking about it and all this other shit. We've been watching it for years.
It's
Like going
2022.
back to
Years at least.
right after COVID. And I've been on the side of like, all right, I think Jerome Powell is doing the right things. He has solid rationale for it. My belief in him is cracking in a big way. I mean, listening to today's presser, clearly the guy is very frustrated. Like he snapped at reporters a couple times. You could tell that he's getting pissy. He also is talking himself in circles on multiple topics, and then just on a few of them, it just seemed like he was straight up lying. So, like, there was the question about, we've seen a rise in delinquencies. How do you feel like your actions are impacting that? He basically said that they have no impact on it. I'm just like, well, you do with interest rates. And like the rates that you guys are keeping rates this high are impacting the amount of interest that people are paying. And therefore it is impacting it. Like, yes, people need to pay their shit, but you're not helping the situation. And he just keeps going back to the same line of like, well, we need to see more data. That's been the line for years now. And we've seen the data. We've seen that the job market is remaining strong. We saw the bounce back in ADP job data yesterday compared to the previous month. We've seen that and like for me, it was like, okay, if there are going to be issues with tariffs, I'm on board with not cutting the rates. We've seen more deals being reached. We've seen agreements with the EU. We saw the extension with China over a few things that it seems like that is going to be, ironed out sooner than later. So I get that you have to be conservative with it and they have time until the next meeting in September. But the guy is just talking in circles and just blowing so much smoke. He's pissing on our faces, Kevin, and calling it rain. And I'm really fucking done with it.
I mean, that's a great way to put it. It's like I said, Jerome Powell, we've seen it before. I don't necessarily think has the best interest for the American people, even though he denied that today and says the Fed has good intentions for the American people. Neither does Trump. Neither did Biden. Really, none of them did. And looking at the data and saying that they're data dependent. Well, we know that the data that the Biden administration put forth was revised heavily. So whatever they were acting on was heavily revised data, and it was never current. And with the Trump administration, I'm very suspicious that it's the same exact scenario, right? So what are we working towards? What is the Federal Reserve working towards? And again, I talk about this too, but the combo of Jerome Powell and Donald Trump, one of the biggest failures of the COVID pandemic was a 37% drop in the market. It was those two guys combined that were in office, right? So I'm saying there's a lot of things that are very reminiscent of those types of flash crashes. If we look to last year, there's a lot of stuff that's lining up towards, a big drop in the market. I'm going to pull up the S&P real quick just because I want to show people exactly what I'm seeing on that front, where I think that we might have topped in the market, and today this speech might have been like, okay, there's no more S&P for, I don't know, say 5 years to this height. It's very possible something like that could happen. I got the S&P pulled up. It's been in this ascending wedge for the longest, since literally the tariffs. So it's very bookendish that we're getting it breaking out of this wedge as we're about to approach, the August 1st tariffs once again. And why this is really important? Well, you can't go back into this very much. I mean, if you do, you have very little room to the upside, right? You need to rally hard as shit tomorrow, Friday, and then Monday, you're out of it. So either you break above this and invalidate everything that's been happening since April, or you've kind of developed the new direction of the trend. Look at the Bollinger Bands too. They're getting very tight. It's very possible it consolidates down here, top band and the bottom band compress more, and you have a violent move either to the upside or the downside. The reason why I'm very cautious to say that it's a violent move to the upside is because if we look at, this is the UVIX, which is a volatility product, 2x. Let me get rid of some of this shit on here. Sorry, guys. But it's in the same exact inverted wedge that the S&P is in. And this was pretty much more or less the same that we're seeing with volatility. So what you would expect from this here is a violent break. And look, as the S&P is breaking down, this is breaking up. So there's a good chance that we're going to see volatility start to kick back in. And, Powell not having to do anything for 2 months, essentially. I think Congress is gone for a while till September something. You have really good grounds for there to be some type of like, oh no, there's nothing we could do type of move in the market. So it's very complex. But again, the timing is just fucking hysterical. Every time we look at this, it's like, oh man, always after OPEX, always in between, like that Q3, Q4 switch over. It's just perfect timing once again. And so Jerome Powell not raising rates or keeping rates flat or not cutting, it's just buying time once again so that they don't have to necessarily do something where the market says your fault.
Yeah, they're just gonna do whatever, they're gonna do the bare ass minimum at this point, and then just make sure that they have an excuse for when things go tits up. One of the last questions Powell got asked was, once his time is up, as Fed chair, would he stay on as Fed governor? It's just like, I could see that being a thing where it's like things go to hell in a handbasket. He cuts rates, like right before his term ends, and then he like stays on and some other bullshit. But anything else from today's FOMC? I mean, I was listening to it, just shaking my head, just once again, the same fucking questions, and just the arrogance that he carries himself with here is really starting to grind my gears.
Yeah, I mean, I've been done with this purple tide motherfucker for the longest. I already know what he's going to say, and again, I don't believe that the Fed is working to actually bring inflation down. If they were, obviously raise rates if you're going to try and get it to that 2%. If not, cut it now and then just be restrictive. At least give one more rate cut. But it's very complicated, and we're seeing a lot of these things pointing at major liquidity concerns and huge treasury market implications this the end of the summer into Q4 because of not only just the tariffs and uncertainty around those. And again, the funny thing about the tariffs too, we have to really talk about Trump. We'll talk about him in a second, is that while while there are deals being made, they're very one-sided. And the EU one, all the EU countries have to agree individually. But for like some of these other ones too, Trump is just touting some of these deals. And then the biggest one was Japan. They're like, yeah, we don't know what he's talking about. We have not agreed to anything. So I would like to jump into Asia if that's cool, real quick.
Let's do it. Yeah, go ahead.
I just want to run through all this stuff because kind of do have a lot to talk about, and we won't be here Friday, but gonna get fun starting Sunday night. Let's look at the Japanese 30-year bond. This is really important. This is the bonds that is showing that there is not a lot of people buying debt in Japan. Their market is absolutely insane. Look how much it's been rising since, say the election. Election would have been like right here. And we've seen that the yield has gone, as high as 41% higher from where it was, currently sitting at about 34% higher. If this thing starts to run away, you have a huge problem on your hands. So we had the yen carry trade unwind. That was last August, where the focus was on the yen. Now we're seeing that people don't want to buy the Japanese debt, and that's a problem. And the same thing in the U.S., right? We're seeing, this is at one point 2 weeks ago. It was at the height of, it made the high, all-time high of the 30-year yield. And then if you look at where the 30-year for the U.S. is, you can see that it's still rising. It's still elevated. And one thing needs to happen, and you could absolutely see this thing pushing up a lot higher. But, last year was the yen carry trade. We're looking at the yen. The yen has been devalued, decent amount. Could it come back down and crash to the lows? I think it's very possible if we see the broader Nikkei turn down in general, which is also possible too, because we have to look at the Nikkei, and it's showing us very toppy signs. You can see the Nikkei here. It rallied all the way up to where it was in July almost of 2024. That resistance right there at that 42.46, 42.450 level, I should say. And you can see that it kind of is coming down already. We're seeing some of these major, gaps down. Got the same thing over here, guys, filling gaps, and then slowly, in a matter of 7 days after, crashed. I'm saying that next, starting Monday, it's very possible that we could be testing this level of resistance, the support line. And if you lose that, then you're probably going to see something pretty drastic in Japan. This is
a crazy looking chart you got here, man.
I know, but it makes sense somehow. Like we were able to predict it happening last year, right? It's it's a very similar situation. I won't say it's exactly the same, but we've seen that the BOJ has been providing liquidity and collateral to tons of assets. That's not a good sign either, because they did that last year as well. So the BOJ, I believe, has their meeting. It's either tonight or it's tomorrow. Regardless, it's on par with the fact that the Fed had their meeting today. This is just going to be complicated stuff for liquidity, because, again, that yen starts to get stronger. You're probably going to see that bleed into the U.S. equity market, where we could continue to see stuff sell off. You're already seeing Jeff Bezos offload tons of stock like crazy recently. I'd like to see some other people offload, and then we can kind of say, okay, this might be another drop in the market coming fairly soon. But these are things that we have to continue to watch. It's things that I will continue to watch, because I do think that Asia is going to be the first part of this play. Then it'll probably go to Europe, and then it'll go to the US if it's going to play out in that situation. But Forex and the bond markets are going to be really important. They want to save the bond market. Remember that. Always want to save the bond market. Equities are expendable to the bond market.
All right. What else do you want to look at? We won't be on for it, but here in the next hour, earnings are going to come out for Microsoft, Meta, Robinhood. Tomorrow, there's earnings for Apple and Amazon. So the Fed excitement is not the last thing that's going to impact the market these next couple of days. A lot still to come. Tomorrow, I believe there's also inflation data, and on Friday, the July jobs report. So we're like halfway through a very stacked week. Tomorrow is PCE data. So whatever, we're going to see movement in the expectation for Fed rates. Now, the market's moving at this point. The market is now flipped to where it's no longer pricing in a rate cut for September. It is now expected that the rates will stay the same at the September meeting. Once again, if tomorrow's inflation comes in, at or below below expectation, maybe we see that number move again. Same for the jobs report on Friday. So a lot to happen until the meeting on the 17th of September. But where do you want to look now? We've had some earnings, we've had some tariff news. Like what do you think is the most important thing at this point?
I think we covered it. I think Asia is the most important. If we look at some of the stuff that's happening, we could take a look at Apple and some of those stocks real quick. I'm not necessarily concerned with those in the most part, because I think that what we're going to see here is a lot of selling pressure coming in, not necessarily off of earnings. Maybe earnings, something bad could happen, and you can see the consumer is weaker and their guidance is poor. Something like that could happen. But you're seeing a lot of things trading within patterns. This is Apple, pointing towards September, middle of September, which I'm assuming would be OPEX. where it's going to just maybe trade within it. If something bad happens, it's very likely that you could start breaking down from there. I think the next 2 to 3 months, there's a fair window for anything can happen, especially with the fact that the Fed is not going to be having a meeting. I can't find any of the stocks I'm looking for right now. The yields, there we are. Amazon, you're pushing up pretty strong, but you're riding a trend line. The second you lose that trend line, that you can kind of see from here to there. You're probably going to see some type of breakdown. I know Coinbase also has earnings. What is that, tomorrow? Given how Farcoin and Bitcoin have been performing, we'll talk about those in a second. I'm interested in seeing how this is. I'm assuming that the listing of Farcoin is going to be great for their earnings. But Google, yeah, I mean, everything is just kind of like in this upward trajectory. You're seeing some things kind of roll over, like the fact that
we got to let's look at NVIDIA real quick.
Yeah.
Because this one, I mean, it's been an absolute piss missile. It's going to close at an all-time high for the 6th day in a row. It is 100 overbought on the stochastic RSI. I mean, this thing, and Jensen sold too, and it's still just been pumping now. Goes to show you that these guys don't know everything, but man, this has been an absolute monster over the last few weeks.
Yeah, I mean, this one, and I think strategy, not strategy in terms of performance, but obviously two CEOs that a lot of people do believe in. This is a dangerous stock. This is why I have not shorted NVIDIA in months. I have not touched it. I mean, if I would have bought back here, yeah, I probably would have made a pretty penny. But at the same time, looking at this is the exact type of high liquidity, stock where there's a decent amount of money in. If you do see a lot of sellers coming out, I think this thing could roll very fast. We talked about that in the past, but this chart is just absolutely insane how much is pushing up, and you got tons of gaps and you're gapping up and you're not necessarily filling them, right? You're just continuing to ride that wave. But I would be very concerned about NVIDIA going into the next few months. Again, you have Trump, you have China, you have Japan. He could ban stuff. There could be some type of, chip war once again. I would just be very cautious with NVIDIA. I mean, something like this, you lose that trend line, what's going to happen? Are you going to trade and find support, or are you going to start filling gaps? You're more likely you're going to start filling gaps, and you got all the way down to like 117. So let me just pull this up real quick. 17 where we currently are to 117, it's like a 33% move. It's a pretty big move for a high market cap stock like NVIDIA. It's pushing up. I can't say anything bad about it in terms of that, but I do think that the vendor financing and a lot of the funny financials that we saw surrounding NVIDIA will come to bite it in the ass, especially the euphoria and the Jim Cramer euphoria. Again, that's like the kiss of death, getting Jim Cramer to, get all teary-eyed over a stock in a company and a man in a leather jacket. I'd just be cautious with NVIDIA. But I did want to pull up GameStop real quick because I do think that we are going to see a lot of liquidity start to pile out of certain things, especially when you see that we are in a liquidity shortage, collateral shortage with Asia. The problem with what I'm seeing today and why it's really funny and complicated for a lot of these things that are heavily shorted right now is that you're offering an extremely valued price, an extremely low value price to things that should be trading way higher. GameStop, for one, $9.1 billion cash on hand. You're pretty much, their market cap right now is $10.03 billion. If it goes down to like $20 a share, you're telling me that's pretty much all of their market cap worth is their cash on hand value. Doesn't seem right, especially for a company that just put out the Push Start Arcade. But what I wanted to talk about here is just the fact that it went right back into this wedge on, right before August. Looking at what happened in Japan, liquidity crisis. Now we're going to get into stapler theory, which is a fun thing that I've been doing, which is the stapler that sold for $250K. There's some interesting stuff that's been happening with that. We've kind of forgotten about it. So no one's claimed it, right? And I'm pulling this up here. This is it, $250K. It made a cameo appearance in the Push Start Arcade, which is the new digital marketplace for trading cards and gambling and games. GameStop is just beta released. It's going to be coming out hopefully in the near future for everyone. But $250K this went for. It's a stapler, Nintendo Switch, also Ryan Cohen's underwear that look like shorts. But it's not this that I was looking at. It's this right here. So this says estimated between Saturday, August 2nd, and Friday, August 8th. Why is that important? Again, I think that's when we're going to see a lot of weakness in Japan, especially coming with their bond market and maybe the Nikkei, and might see a huge liquidity shortage where the yen starts to get stronger against assets. That was the yen carry trade unwind. That could potentially bleed into U.S. markets too, especially if people are selling off debt to pay for, certain other debt or loans that need to be repaid. We're also going into September, period of low liquidity if we're talking about the 5-year loans that need to be repaid. But this date has changed several times. So it tells me that whoever wants this is waiting for a certain date for this to be delivered. The other thing that's really interesting is the 60644. That's like outside of Chicago. Like that's not far. Like I know where that is. The problem is that it's in an area called Austin. It's not necessarily the wealthiest neighborhood in the city. It's pretty low income. The point is, though, who the fuck over there is going to be paying $250K for a stapler? So what I'm thinking is this might be hinting at Citadel Securities. Again, the people who are responsible for Robinhood shutting off the button in the 2021 short squeeze. And this could be Roaring Kitty that bought the damn stapler. That's my theory. That is my theory. But there's a lot of stuff pointing that Japan, Roaring Kitty, and Ken Griffin. I would be interested to see if Ken Griffin actually owns a property in that zip code. Maybe that's for another episode. But I do think that's what we're seeing here. And this is going to be really important for GameStop because once we get into that low liquidity environment and they start to recall shares, they got $9.1 billion of cash on hand. They could still do another issuance and then, double up how much cash they have. I would be very excited to see how GameStop's price reacts to that. I just want to show one last time what GameStop is doing today. It is extremely undervalued. It is down here. It broke out of this massive 1-year wedge. It looks like it's over. Like everyone's probably calling it quits. I don't think so. I think that we are probably at the value in which deep, Roaring Kitty, deep fucking value might be adding calls here. And that's detrimental if the price starts pushing up. Say they start buying back stock down here. Like there's a lot of things that could definitely happen that could complicate the short squeeze and it just pushes the price a lot higher. There's other stocks too that I've invested in that I'm very bullish on.
Real quick, the GameStop, your theories there, it is just straight up Charlie Kelly, chain smoking, Pepe Sylvia in front of the board with all the strings connected, like just really top-notch stuff here. If it plays out that way, then that's fucking awesome.
Oh, I know it's going to play out that way. But the only thing is that zip code. No one's talked about that at all. And I look at that zip code and it's like, okay, where the hell is this thing going? Or is Roaring Kitty going to just like show up outside of like the Citadel building or something like that? I don't know. But it'd be funny to see that. I do want to talk about some other short squeeze stocks that I'm looking at. Again, things that are heavily shorted that I think that there's an immense value potentially if we get into a low liquidity environment. GNS is one of them. Been shorted nonstop. Tons of shorts, shares that don't exist have been borrowed to short against it. They're in the middle of a lawsuit. Again, they said that they're going to pay out 50% of the lawsuit to shareholders, which is an amazing thing. The CEO is not selling 80% of his shares, he said, that are within the lawsuit because of he wants to protect the shareholders, and he's tired of the short squeeze. It's very similar to what's going on with Quantum Biopharma. These CEOs and these boards are actually fighting back against people who are shorting against these companies. So again, is it smart to be, I saw on Bloomberg, I forget, Semenova, I forget her name. She was saying that all this retail euphoria and these small stocks like Kohl's and all these things, these are bad companies. It's like, yes, but there's actually a mathematical formula, or not necessarily a formula, but there's a reason why we're fucking investing in some of these things. It's low liquidity, allows for harder opportunity for the shorts to continue shorting. You need cash on hand to short some of these things, and if they don't have it, you're going to push the price higher and higher and higher until you have to cover. I think that time is very soon. But I'm looking at this thing right here. There's tons of gaps. Look all the way to $10, all the way to $27, all the way to $62, all the way to $100. I'm not saying this thing is going to go that far, but I definitely have a position because I do think that there are going to be a few of those. Look at FFAI that we've talked about recently. I sold 2/3 of my calls on this up here around 350, but we were talking about this thing when it was down here at like 105, even lower when it was like 86 cents. But you can see that it was in this parabolic trend line. This is UBS funny thing about this, if we look at UBS right now, UBS was using this as a hedge against GameStop. And why I think that also UBS might be in a bit of a fuck position. UBS is literally at the top of a parallel channel. It's like things could not be more perfect for things to flip in this market. I truly believe that if we do see problems in Japan, that's going to go over to Switzerland. Maybe UBS sees a huge drop in the market. They have less cash. Maybe they push FFAI up, but there's a good chance that they can't short all those GameStop shares that they have, or continue to keep the price down that they acquired from Credit Suisse. Again, toxic derivatives all around. Japan is kind of the fuel that allowed that to happen. So this is going to be a really fun contagion event, I think. Outside of that, let's talk about some fun stuff.
Wrap it up. Yeah, let's wrap it up with some crypto.
Yeah, let's just do Bitcoin real quick and then Farcoin and call it a day. Bitcoin, nothing really here, right? I don't necessarily have an opinion on it one way or the other. I think that 108, 110 is a level that it could bounce to, their 50 moving average. But just hanging up here shortly, I don't know. It's very boring watching within this like $4,000 price range.
Yeah, it's looking. It's pretty oversold at the moment. I think that there's still. I mean, we just see MicroStrategy keep buying more and more and more of it, like making it even more centralized. Like at this point, they own like what 3% of the supply. Like it's looking crazy.
Well, that's the thing too, that with why we're seeing alts and Farcoin kind of in this shitty position. You need to see a lot of the institutional investors in Bitcoin lose faith in Michael Saylor's strategy, not MicroStrategy, but his strategy of just continuing to buy Bitcoin higher and higher and higher by issuing, collateralized bonds. The problem with that and issuing more shares is that if this price starts going below a certain price level, they're going to just have to start selling off shares or selling off Bitcoin to make sure that their company itself doesn't just go under. I think it's very possible that happens. That is, I think, one of my convictions. I had convictions about SBF. I had convictions about CZ going to prison. Some about Jensen Huang and NVIDIA and vendor financing. But Michael Saylor, I think, is going to fuck up a lot of the crypto landscape if he's unable to keep the circus act going. Again, it's very possible that Michael Saylor is the reason that we see Bitcoin drop to extreme levels. I'll just leave it at that. You just need to have cash on hand. If you don't have cash on hand to push the price up, you're absolutely fucked. But the reason why this is important is because Bitcoin still staying relatively high means that the alts cannot run. We've seen a good pullback in dominance. We want to see more of that so we can get our little last blow off top. I still think is possible, but it is seeming hopeless in some instances. For one, Farcoin has just been, a steal in the past few days, but that kind of sucks how long it's been staying to the downside, right?
Yeah,
I know I'm certainly annoyed, but
yeah, one thing I want to say that bullish for Bitcoin was the announcement of Coinbase partnering with Chase Bank. Like that,
sure.
That's a good thing. Like that is, there are more and more signs of the legitimacy and the perception of crypto changing. And Bitcoin will always be the first to benefit from that, then probably Ethereum and then some of the other alts as well. But I also didn't mention tomorrow's Coinbase earnings too. So tomorrow's going to be, after close, could be some fireworks. Like it could be another day similar to this where like, it's a little more boring throughout most of the day. And then the fireworks really kick off. But let's talk about Farcoin here, which has just been a real thorn in my side. I still have faith in it. Like it's still a good meme. It still has so much mind share. Like people will still point to Farcoin like when they're making fun of memes, and like that means something. Like that is not a non-existent sign right there. So we're seeing it bounce off this trend line. A week ago, it was at, it's down like 36% in a week, just like fucking brutal. But what are you seeing here?
I'm seeing the only thing I can to be hopeful, an inverse head and shoulders, but it's just this right shoulder is the bane of my fucking existence recently. Again, I could have sold at 170, whatever it was. I would have been happy. I take a little bit of profit, but I believe in this thing so much. I still do believe in it. It's just we need to see this start to push up and fill this right shoulder out so that this handle to this fucking massive cup that we put in is an inverted head and shoulders, and we have, fireworks to the upside. The problem is this 160 level, pain in the ass, and also that 170 level that just whenever it got around there, get thrown down. I don't know what's happened in crypto in the past week or so, or 2 weeks, just where, you've seen a lot of, the dominance looked like everything was going to be pushing the alts up. And then you had this pullback. I don't know. I still think that there's no reason we got this massive cup without having this handle and breaking out of this. I still believe that that's the TA that we should see.
I think one thing that we've seen is the absolute disaster of Pump token launching. The Pump Fund, their site, their launch pad, the token being an absolute disaster. And people just looking, people who are down on those positions looking to take profit elsewhere, and they see Fartcoin get to these levels, and maybe they bought when it was 20, 30, 40 cents.
Yeah.
And they're like, hey, I've got my shit pushed in on Pump. I need to realize some profit elsewhere to stay afloat, and Fartcoin may be suffering from that. So it's a shitty spot to be in. Hopefully it's just a matter of time before those tokens get dispersed to people who, don't have as low of an entry and aren't quite as desperate. But I do think that is contributing to it. Also, we've seen with ETH running, some of the ETH memes have been leading the way, as well as on Sol, you've had Pengu, the Pudgy Penguins token, been on an absolute ripper. So I think this is one of those spots where, like, Fartcoin, I still believe in it. I think it's taken a back seat and it's suffering from a few different things that are keeping the price down. But I do believe we're still going to see fresh all-time highs on this one eventually.
Absolutely. I want to believe in Fartcoin out of all the alts. I'm looking at ETH right here too. It's approaching that level of resistance. I'm looking at the MACD looks absolutely insane. Let me see if I can pull this up to the whole screen. Look at that MACD. I mean, you could probably look back in history and see when it's gotten overextended like this, what happens after. But yeah, our first red candle down here, you can see that it's rolling over. I think we're hitting resistance on ETH. That's just my opinion. Maybe we push up a little bit higher. I don't know what the fuck I'm looking at. I just broke everything.
That's not good.
All right, guess what, guys? We're gonna
broke trading view.
All right. Well, clearly I don't know what I'm doing, but yeah, that's how I feel about the market right now.
All right, that's going to do it for today. Appreciate those of you who joined us. If you're just popping in, rewind back to the beginning. I had a little bit of a rant about today's FOMC. I'm feeling a little bit better about that now. But hope everyone has a great rest of your week. Kevin is working Friday, so we will not be here. We'll be back at some point next week, though. So stay safe in the markets, everyone. Try to enjoy the rest of your summer, and we will see you next time.
Take care, everyone.